Good morning, you guys. All right, today is Wednesday. I'm a little bit late getting this out from when I wanted to, which would ideally been over the weekend, but right now is the first chance I have to take care of it. So let's get into this. This video is going to be for those of you guys who invest in the TSP Mutual Fund Window, or who have IRAs, or maybe even taxable brokerage accounts, and you prefer sector or industry funds. If you want something a little more narrow than broader stock index funds, it's where you get slightly somewhat better, some sort of possibly better performance than you get from broader index funds, but maybe you don't feel comfortable investing in individual stocks, individual company stocks, right? If that is what your preference is, this video will be for you. If not, well, actually, you know what? I am going to do a stock screener on the end of this one here as well for S&P 500, because a lot of this already covered in previous videos or posts on Facebook. This is really just going to mostly reiterate what was already said before, with very few changes, all right? Very little change. So I hope to make this video on a fairly short side here for you guys, right? That said, let's go ahead and get into this. We're going to start with the sector and industry data today, and particularly the sectors. Going to give you a kind of rundown on how the sectors are performing so far year over year. This is what this view here is going to show you. Year over year, the energy sector is generating the best earnings performance. It's more than doubled the previous year's performance in terms of this most recently reported quarter, or what the most recent reported quarter is that I have to work with. Okay, it's a rolling total. So those that have updated earnings already this quarter, they're already factored into it. If they've not updated the earnings yet this quarter, they're working with last quarter's data. Okay, so but as new updates come in, this is basically dynamically changing. But yeah, as we're seeing here, energy, tech, materials, and communication services sectors are all getting really good performance. Financial sector actually doing all right here at 20%. So something to consider here. All right, because when we look at this information here, this is the same sectors, but sorted in terms of what are they expecting over the next year. And as you see there, communication services is expecting over 54% earnings growth over the year. Tech is expecting over 52%. Energy is 48%. And materials is 26%. Now, financials, you're going to see is way down there near the bottom at almost 5%. So this is one of these the ones that raises questions. What exactly is going on here? Why is the financial sector seemingly performing so well, but only expecting 5% growth over the next year? Are we just on the back end of what their expected strong growth is, and now we're basically what's showing up in the earnings is just basically confirming what was already expected before? Is there something else going on here, like unexpectedly good earnings performances? For that, you really got to do the microeconomics and dig into what each specific company in that sector is reporting or talking about, and maybe get kind of a consensus idea of what's going on there. I don't tend to look so much at the microeconomics myself. I look more at the earnings fundamentals, but I'm just saying I'm at least pointing you in the direction of where we could be looking for more details to explain things like this. Okay. And but at least as far as the earnings or expectations are concerned, I'm still expecting communication services, infotech, energy, and materials. Those are the only four that I have any real interest in personally, as far as a broader sector is concerned. And my stock screening criteria that I'm going to cover at the end of this video is also based on this branch out process here. Okay, the macro oriented look. And in terms of price performance from the end of July, year to date through the end of July, compared to the S&P 500, this is what we have going on here. The index itself is at plus 9.41%. It was over 10% at the end of June. So we had a down month. That's why I say if you are following my retirement withdrawal strategy, which is basically divide your balance by 240, and whatever that amounts to, set that as your monthly withdrawal amount. But and then every time the S&P 500 ends a month lower than the previous month, then go ahead and recalculate that same formula and adjust accordingly. If it finishes a month up, then just keep coming out at whatever rate you're already at, and then next time you have a down month, go ahead and recalculate and adjust. Your amount that you're withdrawing based on that strategy should go up progressively over time and leave you with increasingly higher account balances too, if you're investing effectively. Okay, so that said, though, so right now I'm expecting 16.5% growth out of the broader index. We are, actually a little more than halfway there so far with the actual price performance from the index. So it's not looking too bad there. It's at least seems to me that earnings and price seem to be generally tracking each other so far. But now there are a couple of anomalies here that we want to talk about here. Fine. So I already know we have already talked about energy, tech, and I think materials. Or no, materials is yeah, it's expected to outperform. It is performing the broader index right now, but not by a very large amount. Real estate is also outperforming when I'm actually expecting it to be the laggard of the entire index. So that's one of those. Why is real estate outperforming the broader index? Why is it not showing up in the earnings expectations that are basically consensus of the professional analysts who look at these companies? Raises questions there. Are investors just putting too much faith and putting too much interest in that sector when they shouldn't be, or is there something else going on there? Right. I do know that real estate does tend to be affected by interest rates, and bond yields have been trending upward lately. We do have a bullish bond yield curve. I talked about it in my previous video, but as rates are generally going up, it depends on what kind of companies are involved. Some of them, if I'm not mistaken, benefit from higher yields. Some of them get hurt by higher yields. So it's kind of a pick your point, kind of a mix there, I guess. It's just one of those what's really going on there that I would want to do more research on if I'm looking to invest in that particular area. All right, and then the other thing here is, why is communication services the laggard in actual price performance, but the leader in terms of earnings expectations? That is a real big question mark there. Now, I've talked before about how EchoStar is single-handedly a big part of why this one is the top performing as far as expectations are concerned, because they had a minus 44 earnings per share report 3 quarters ago. But even if we zeroed out that earnings, or just say they didn't report anything at all, this broader sector should still be reporting, I think, a pretty fair amount of growth, more than what the broader index is expecting. So I'm not really, don't have a good explanation for why comm services is at -8 year to date in performance, whereas the S&P is up plus 9% and more. And especially when communication services is clearly showing that they're expecting the strongest performance. I've already showed you that their year-over-year earnings performance for the quarter is producing the results. So why aren't they getting the price results to go with it? There might be some value opportunities there for you to invest in that sector. I don't know, but got to look more, take a little bit more of a deeper dive into that sector if you want to, if you're interested, that you might have some good opportunities there to possibly see some good gains in the coming quarters. All right, and let's see what else was there. Yeah, industrials, I'm expecting to underperform the index, but it is outperforming the index, almost 16% to a little over 9%. So once again, is this just some short-term thing? Maybe it's a little bit overvalued at the time being. I don't know. Infotech being up over 21% when they're expecting 52% growth, it doesn't really seem so unreasonably priced given that. And then energy sector expecting over 48% growth over the next year, and they're at plus 33% year to date. That is significantly outperforming the index. Are we buying a little bit too much of next year's growth? Possibly, I don't know. But the growth is expected to come. It's just our investors may be pricing in a little bit too much of it. So as of right now, it seems to me that energy is a good place to be, but short term, I might expect a possible drawback in prices in that area. Tech, I know they've been beat up a little bit, I think, in recent weeks, but at least as a group, they seem to be tracking okay with the performance. So might be an okay time to be buying more shares in that area. And then industrials, again, I'm not even interested in that sector. And materials, like I said, they're looking all right there. These should still be okay to get index beating performance out of them, especially when they're maybe a little bit less than half of what they're expecting over the next year. So it seems like there's at least some value out of materials, not to mention their index beating performance expectations. So that might be one I would have more of an interest in, as well as communication services. Comm services, though, you guys are going to probably need to be more of a contrarian view on this to have an interest in it because of their performance. But again, this does require more of a dive into the rationale behind why are investors totally ignoring communication services stocks in general and selling them more than buying, and when they're expecting such good growth over the next year. And if you want to break down into, take an even more narrow look within each sector at particular industries or industry groups or sub-industries, here's the areas that you might want to take an interest in, all right? So if the energy sector, oil, gas, consumable fuels industry, there are 3 sub-industries there that might interest you. There are 14 stocks within that group, but not all of these are going to make it into my screener that I'm going to show you next. Metals and mining for the materials sector, that would be a particular area of materials sector that I would have an interest in. Not gold though, but copper and steel, yes. Now, there was another industry within the material sector that was making it through my screening process previously, but it's no longer there. I think their year-over-year performance is there, but now I think their expected growth over the next year is tapering off just enough to where they're no longer making it through my filter. They're still expecting decent performance. They're just not making it through my filter. All right, I think I had with the chemicals, with the industry level, I want to see at least 30% growth from the group, from the broader group, and I think they're at like 26, so they're not far off. They're just not enough to make it through my filter. That's it. So you could still have opportunities there in the chemicals industry, but more particularly, I would focus more on the metals and mining industry specifically, and more especially on copper and steel. All right, and then in the tech sector, this breaks down into 3 industry groups. That is software, hardware, and semiconductors. I would not be investing in software. There's not enough there as a broader group to interest me. So I'm not interested in that. If I wouldn't do it with my own money, I'm not going to suggest it as an area for you guys either. All right, hardware and semiconductors, however, is another story here. Got 9 hardware stocks in this sub-industry here that, the hardware, storage, and peripherals that may be of interest. Again, not all 9 of those are necessarily going to have the performance expectations that will meet my screening process, but that's the group I would focus on. Semiconductors, same thing. You don't want semiconductor equipment sub-industry. You want semiconductors, themselves. The 15 stocks in there, I'll cover next in a little bit here which ones of those actually meet that criteria. And then in communication services, only have 2 areas here: media, cable and satellite, particular industry, sub-industry. There are only 3 companies in that sub-industry. EchoStar is one of them. That is one I've talked about. And speaking of EchoStar, they just recently changed their stock symbol from SATS to Echo. So might want to keep that in mind too if you guys are familiar with them. If you're having a hard time finding them, might be why you can't find them. All right. So, and then also in the entertainment industry, movies and entertainment is okay. Interactive home entertainment, I would not recommend, at least for what we're seeing right here for the earnings. All right. And you see all these, but communication services are currently outperforming the broader S&P 500 index in terms of price, which is what I'm expecting to happen, right? And I'm expecting it to continue to happen as the year progresses. Lastly, I'm going to do a little go over the stock screener for those of you guys who have taxable brokerage accounts and you want to invest in specific companies, all right? So these are the ones, as you see here, I've already updated EchoStar. They are showing up in here. I did talk previously in that last section how there were chemical stocks that were showing up in here, but they are no longer there because their broader group is just not expecting quite enough growth as a whole to interest me, okay? But otherwise, these are the stocks that are currently meeting my screening criteria. I think there are about 28 of them, if I remember seeing right. All right, so for those, if you're wondering, the ones that are in the dark blue boxes here on the tickers column, those are in the top 100 in the S&P 500 as far as market cap is concerned. And if you see peach color right here on the company name, that is because they are a Dow Jones Industrial Average stock. So that, even though I don't care about the Dow, I still point that out just for those of you guys who might have an interest in that kind of thing. If you want blue chip stocks, then NVIDIA might be the only one in here that would really truly interest you in that case. But do we have a good number of heavy hitters here, as you see here? I got 2 of them here with $1 trillion plus market caps. Looks like Broadcom and NVIDIA are the 2. I have Micron it's over 900 billion. So they're not too far below $1 billion. So that might be of an interest to you as well if you're in something like a heavier hitter. But all right, so I'll let you guys go through this list. You guys figure out if any of these interest you. If you want diversification, maybe you already have some coverage in a particular area and you want some more coverage in a different area that you might see here. One of these 4 sectors or any of the industries or industry groups that I already talked about, they will show up in here, okay? And they only show up in here if the individual company is expecting 40% or greater earnings per share growth over the next year, all right? So if you got the EPS growth expectations, then the price should also be there. So if you're not seeing the price follow suit, it might just be that they're waiting for confirmation for the earnings to actually show up and produce. or it could be something else going on. All right, you just got to look at each individual company and do your diligence with each of them to figure out why, what's actually going on. All right, and just keep in mind, the more narrow your focus is, the more like on one company you get, the more risk and reward you're going to take. You have the potential for much better price performance, but you're also going to have more potential for volatility in the price behavior as well. Okay, so keep that in mind. If you want better than index performance, you got to go more narrow. You look at in those particular sectors, preferably, and if you want more than what the industries are going to give you, then narrow it down onto the industry groups. And then like I said, the industry groups, you can focus a little more narrowly on industries, and then you can focus more on sub-industries. And that's how my top-down or macro look at it, at stock screening works here, okay? So I'm gonna give you a couple last slides here that show these same stocks here with some other details in them that interest you. This is as of Friday, the end of July, which was also last Friday. Okay, this is, again, these same stocks, but shows their current market caps, the price, how much they changed on Friday, just Friday alone, how many shares are outstanding, what percent of the S&P 500 market cap they represent, and what kind of dividend they do or don't pay, both in terms of raw dollar amount and what kind of yield they produce. And lastly here, this is just a look at which of these companies, what are their next earnings dates. You can see that some of them have already reported earnings, some have not. Some of them are coming up really soon, actually are this week. Some of them have already reported this week, but I just haven't updated their data yet. Others will be later this week. It looks like only a couple of these really are not until next month. Micron, they generally don't report until almost the end of each quarter anyway. So yeah, and as you see here, they're not expected to report until September 23rd. But most of these, SanDisk, they report later this month. But most of these that are making this through the screen are actually reporting this week alone. Broadcom, they don't report till next month. And Hewlett-Packard Enterprise, they also report next month. And then Marvell Technology, they report later this month. Otherwise, though, yeah, most of these are going to be reporting this week if they've not already reported. All right, so next week's report, I will be talking about those. That's going to be a wrap for this one here. I hope you guys got some useful information out of this. I know it's a little bit longer-winded than I planned on, but again, I try to make sure I give the right details for those of you guys who need the details, all right? So bear with me. If you guys, just keep in mind, if I'm posting it on Facebook, there's a better chance I'm also including the pictures in the post, so you can just go straight to the pictures and get your own info from them, all right? All right, but for those, this is specifically intended for YouTube, so I can't just show the images so easily on YouTube. This is more for those who actually want to listen, and even better if you're listening than watching from a TV, like a smart TV. This is the best. It's the best way to be watching my videos, right? All right, that's all I got. I will have another update next week, since this week is another busy week for earnings updates. Again, I have over 140 companies that I'll be looking at this week, which is going to put us about 80% of the way through earnings for the quarter. So we'll have a significant idea of what the end quarter is shaking out to be as far as earnings performance is concerned. And then after that, I will go back to the normal end of the month updates and end of quarter updates before the next quarter begins. All right, that's all I got. Hope you guys enjoyed. Post any feedback you have, or comments, questions, whatever, and we'll see you guys on the next one. See ya.